Hey everyone, John Henry here, SlingshotFutures.com, and welcome to the daily market outlook for futures in Forex, where we take a look at our big six markets. The main goal of the outlook is to create a plan for tomorrow so that we can be as prepared as possible for tomorrow's price action. Now, before we start diving into everything, make sure to swing on over to SlingshotFutures.com, scroll down just a little ways, and you'll find the sign-up page for the Outlook newsletter. That way you're added to the email list, and you never miss when this comes out, and you'll know ahead of everybody else as soon as it launches, so you'll be able to view it and get ready for the next day. Along with that, we post our daily levels at the bottom in the blog section, so you know all of the major levels that we were looking at as well for that trading day. Now, when it comes to the big six, first of all, obviously the big elephant in the room, it's the day after elections. We've had a lot of movement, right? Now, I think it's an understatement to say the volume was high. The S&P was pushing 2+ million contracts by the time 8 o'clock this morning came around. So the fact that we have such massively high volume really gives us a clue in terms of what's going on. And just that it feels like everybody is finally kind of exhaling, right? We've been holding our breath for the past couple months as this election has been progressing, and we've been getting closer and closer, and now it's finally kind of behind us. And now we can finally exhale and kind of go back to our regular daily lives. Now, that being said, we're not going to see volatility completely dry up in one day. That's not going to happen. What we can expect, though, is that volatility will start to return back to normal as we edge in towards the end of the year. So the rest of November, we may have a little bit of action. As we go into December, we'll probably start seeing things calm down a little bit and return to normal as all of this kind of shakes itself out. So the first one on the list here, let's take a look at gold. Gold, very, very big move down, and we've been having wedge after wedge after wedge. Very wide wedge working its way lower, and that has offered up several areas of interest, but we've also tightened down to a slightly more aggressive wedge, and even arguably, you can see a channel inside there as well. Now, from that point, we are forming a higher low attempted reversal where we are getting another wedge on top of everything else. So we're kind of tearing our way down. Initially, we had a push, a little bit of a kind of consolidation, push down, consolidate, push down. And then we started going into the bigger side of things, right? Bigger push, consolidation, bigger push, consolidation. And that can even be subdivided. Bigger push, consolidation, bigger push. So now we're on this third attempted leg, right? We've seen all of these moves come in threes, and so far we really haven't had that third move. Arguably, you could say, yeah, that might be the three, and that's where the wedge is coming from, but this could also be setting up for a possible third major leg down that we would be looking for those big bear targets below. Now, we are finally correcting back, right? We're finally getting a correction back into an area of interest. The entire way down, nobody really wants to sell way down here. They want to sell these pullbacks. They want to sell the small pullbacks, this pullback, etc. They don't want to sell all the way down here because there's just no room for the trade to work anymore. And right now, we are in a sell zone where we're looking for potential selling pressure for the sellers to kind of reclaim some ground, get some better prices, and then finish off the job to the major bear targets below. Now, the major bear targets below, that's going to be from 67.8 as the most conservative one. That's the closest one to current price action. And then the big objective further down at 62.2. Currently in between 77.1 and 79.4, that's the area on gold where we would like to become sellers. If we can get a nice setup in here, we could easily find some opportunities to start selling into it, shorting opportunities down back to finish those objectives off. Now, if the market does want to rally even further, the next area of interest, and this is the big boy, is between 91.3 and 87.3. That area inside that top, that's the consolidation that we had after that big drop lower. And very frequently, after big drops, the little consolidation that you get, if the market returns to it, it treats it as a very big area of resistance. So I would love, if we can get up there, to see a possible opportunity to short in that location as well to finish off the job if we haven't already. So looking to sell on the gold, and we're actually in an area that kind of makes sense to be a seller on gold. We just need to wait for our setup and follow our plans. Next up on the list is going to be crude oil. Now, crude oil had a pretty much a full-blown reversal, right? We had a big dive lower. They pushed all the way back up. And with that big drive higher, that really all came in one big directional trend. And even the pullback wasn't that that aggressive. Not considering, some of the other pullbacks that we've seen today, they could barely get underneath the moving average before turning right back up again. Now, a lot of times when you get that aggressiveness, you will see this as an ABCD leg, which it very obviously is. It's holding channel highs nicely. Everything is lining up really, really well for that continuation. But a lot of times you'll end up getting a deeper pullback. It'll look something like this. You have that first leg up. Not even that, actually. It'll be a really shallow pullback, a bigger move up, and then it'll come back and it'll trap that low. And then it will turn back up and finish the job off. So that's something that we have to keep in the back of our minds, where right now we are in a buy zone, but this may just be a trap, right? Getting buyers stuck in so they can shove the move right back down in their face, trap that low area between 44, 47, and 27, and then rocket ship the thing right back to the highs to finish off the bullish objective. So in this area where we are right now, this is still a buying opportunity. We may find some reason to become a buyer in here between, 35 and 20 or so, but I would really like to see another push down from the sellers, finish the drive lower, and get us into that bigger area of interest below before we start pushing back up towards the highs. And then finally, the S&P. Now, the S&P, this may look a little bit crazy. Every single one of these little boxes, I don't even know if I can draw a square that small. That's 4 ticks, right? So this is a gargantuan move. If you look at the lows, you'll notice we found a limit down in the overnight session. So from 2030 all the way up to 2170. That's a monstrous move for the S&P. Now, obviously, the market loved the fact of the elections and how it all turned out. We're getting a nice bullish response after that initial bearishness. Really, what were we able to complete? Well, the overnight bearishness was taken back. And really, on the day, this ends up being a huge wick on the bottom of an otherwise bullish candle, right? We have the open right there. We're closing somewhere up here, and there's going to be a small wick on the top. So if you draw this up as a candle of a day, then you have a candle that looks something like this, right? Very bullish day. Huge rejection off of the lows, and the buyers are showing a lot of strength still. Now, we are finding a little bit of a top here. Not really a huge surprise after this big of a run up. If you've been long from down here or here or here or really anywhere, you're probably taking profit at the end of a day like this. So kind of keep that in mind. It wouldn't be a surprise to see a nice little pullback. And what I would really like to see here for the S&P is just for the market to come back a little ways, get us a nice area of interest, get a heavy pullback, once again, like we were talking about on crude, trapping a prior low, making an obvious attempt down where the buyers are going to take some profit. We'll trap out some of the more kind of rookie traders, if you will. Their stops are going to be a little too tight, very common. Whip them out, and then finish the job off back to the high. So between 21.48 and 46.25 on the S&P would be a very nice place to start looking for that to happen. So now that we're out of the futures market, let's take a look at the Forex markets. The Forex markets have been another very active industry. Obviously, it has a little bit to do with the US dollar, right? US elections, US dollar, strange, right? So we started off the day on the euro with a massive rally to the upside, and it completely collapsed all the way back down. Pretty much the inverse of the S&P. So with that big run higher and a complete correction back down, we formed a new low. This candle is the opposite of what you would see on the S&P, right? We open and close very near the low. If at all, there might be a 1 or 2 pip tick wick down here, but the candle looks like this on the daily chart, right? Massively bearish rejection off of the high move. Now, that being said, if we zoom in a little bit further here, we can see that we're getting slightly consolidated. We have a big spike down, and now we're starting to kind of channel wedge our way lower. Larger channel support, as well as some smaller areas of resistance above us. At this point in time, we're a little too far down to want to be long-term sellers. This isn't the place where you want to start selling. The move's done. You missed it if you're trying to sell down here. What we need to see is a correction. Now, you could look for a shallow correction, maybe back to 940 even, but I would really like to see them take back some of this move so we can get better pricing to finish the move back down. So between 9577 to 9664, and even better, 97.96 to 97.49. Those would be the two big areas that I would love to see the market get to on the euro so we can start looking for shorting opportunities to drive the market back down and make an attempt at the lows. Given how bearish this has been, they may not be able to pierce the lows immediately. It may go range bound for a little while, but that's really what I'm looking for on the downside for the euro. Taking a look at the pound dollar next up. It did have a move off of the elections, but not anywhere near as impacted as we saw in the euro or the Japanese yen. A little bit kind of a shelter market, if you will. The pound dollar, more of a wedge. We're seeing the resistance coming off of the highs, really nice resistance off the highs, rising support off of the lows, and that ends us in a pretty much flat triangle. Now, in this triangle, most of the time, these wedges / triangles are treated very similarly to a range. You're looking to sell high, and you're looking to buy low where possible. Now, given the fact that this was such a strong move up, you would expect the buyers to want to take it back, but so far they haven't been doing so well. And if anything, this almost looks like a breakdown into a bear flag and a possible continued break lower. Now, again, the pending move to the upside is really what is a concern here. So if the sellers are going to take over, they're going to need to do it right now. This is the area where sellers are looking to jump in because their stop can be relatively small and their targets can be very large down into the area of support between 23,635 down to 23,533. There is an area of support in the way, kind of the intermediary, where you have 24,080 to 23,992. That location will be a short-term profit target, returning back to those lows. And if you are a buyer, that will also be right around the bottom of that wedge and in an area of support. So you may be able to find some buying pressure. Again, we need to treat this very similarly to a range. We're looking to sell high, and we're looking to buy low. And if it breaks down, still looking to buy low, just a little bit lower. So where we are now, we're kind of in the middle of the wedge. Generally speaking, when you're in the middle of nowhere, you're better off just kind of sitting on hands and waiting. So at this point in time, I would really like to see either a run higher into resistance zones or a push down into support zones. And then we have the final one on the list, the dollar yen. Now, the dollar yen was a rocket ship. The same thing that we saw in the euro, same thing that we saw in the S&P and crude oil. Big move down and followed it up with a big correction back up. Another massively bullish daily candle here on the dollar yen. Now, with this run higher, we have kind of petered out a little bit. We've got a very tight little, I guess, kind of pennant, sort of a flag, sort of a little mini channel, just a very tight area of consolidation. The buyers aren't really taking it higher, but the sellers aren't gaining much ground either. Generally, when you have this kind of move, you're expecting either one of two things. Another aggressive push higher, which in this case, given how many pushes higher we've had, is going to be a little less likely, or you're going to get a deep correction. Now, with a deep correction, I would love to see the dollar yen push down into 105.304, down to 105, 153 or so, maybe a little bit further, to find some buying opportunities. That said, we are testing the bottom edge of the rising wedge support. So if we do find a major area of support coming in here, and you'll know because the candles will make it really obvious, we would pretty much be looking to buy now. It would have to be assumed aggressive though. The upside doesn't have anywhere near as much room here as it could if it pulls down to here. So looking to be a buyer, this is an area that you would want to be a buyer, but for me, I would rather get a slightly better price. So I'm going to hold out and see if I can get into that 105.304 area, down to 153 or so. That would be a slightly more conservative place to look. So that's going to do it for the daily outlook for trading on 11/10/16 going into Thursday, the day after elections, getting all of that out of its system. Probably still going to be volatile for a while. So as we've been saying for the past couple days, just be careful. Keep your risk in line, keep your exposure in line. Make sure to get your plan, trade your plan, follow your rules, and you'll be just fine. So until the next time, we will see you all tomorrow.